Hey, this is Matt from InvestiQuant. Today is Thursday, February 17, 2022. Yesterday, the markets consolidated the majority of the session, and then they got volatile following the FOMC announcement. The announcement came out at around 2 o'clock. We got a dip down to make a new low of day there just after 2 o'clock, and then by the end of the session, we were trading up at the highs above the early morning highs, above the prior day highs. So we have what's called a neutral extreme day, which is a market profile pattern we have available within our profile pattern section here. And we're going to look at this pattern this morning. So let me go ahead and set up this test. We'll be looking at all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading lower in the overnight session, so I'm going to add that to the study by going to the opening filters, gap direction, and clicking on gap down. Next thing I'm going to do is I'm going to build out this neutral extreme day. So I'm going to go to the profile patterns, which is looking at market profile information here. And I'm going to go to the day types over here in the active today and click on that top option, which says neutral extreme. Neutral extreme means that the 60-minute high and low were both breached within the session. So we took out the 60-minute low first, and then we took out the 60-minute high later in the session and closed above the 60-minute opening range high. So the extreme part means that it closed outside of that 60-minute opening range, and it closed in the upper portion of the range, so we call that a neutral extreme up day. So neutral extreme can be an up day or a down day depending on where it closes relative to that 60-minute high and low. So to make this a neutral extreme up day, I'm also going to go to the price patterns. I'm just going to say it closed above the open, which means that it would have closed in the upper portion of the range above that 60-minute high, since we're using this neutral extreme pattern. The two of those together make it a neutral extreme up day. All right, next I'm going to put it in a similar market scenario. We closed below a 10-day simple moving average, so I'm going to click on below 10-day MA. But we were above a 200-day simple moving average, so I'm going to go above that. You can grab both of those from the active today section as well. And now I'm going to click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior session has a neutral extreme up day in a weak bull market environment, followed by a down gap. So historically, we've got 42 samples here in the S&P. We've got 33 in the NASDAQ, 33 in the Dow, 64 in the Russell. The win rates on them, weak for the S&P, 36% of these have closed above the opening print for the day. For the NASDAQ, just 30%. The Dow and the Russell are both very neutral there, 52% apiece. If we look at the average moves, the average loss larger than the average win in all four of these instruments. So S&P, NASDAQ, Dow, Russell all have larger average losses compared to their average wins. So historically speaking, bigger moves have taken place on the downside following this pattern, and for at least two of the instruments, it's also closed below the open more often than not, so a little bit more of a bearish pattern for at least the S&P and the NASDAQ when this pattern is in play historically. Hopefully you found that helpful. Good luck today. We'll see you next time.